Hello, everyone. Thanks for joining me today. We're going to talk about whether or not there's going to be a real estate market crash in the near future. I've heard a lot of professionals saying that, and peers saying that there is going to be a market crash. This is a bubble, that it's just like the bubble of 2008 when the market crashed. I have consumers who are just people looking to buy or sell that are concerned with purchasing, and sellers concerned with having some place to go. So we're going to talk about the facts. Okay, so what exactly is going on in this market? What makes it different or similar to what happened before? Before we get started, this is really geared towards industry professionals. If you're a real estate nerd, if you just really like facts and figures, this is going to be fun for you. If you're just looking to buy or sell a home, this is probably going to be pretty boring. So take it with a grain of salt. If you start this video and you get bored halfway through, feel free to close out and then just send me a message and ask me what my opinion is, because this is going to be, I'm going to try to keep it under 10 minutes, but we're going to be pushing it. So we'll jump right into it. Before we even get started in the facts, we really need to go over what a supply and demand curve looks like. In a general market, this is with any industry, any type of item or anything. You're going to have your price on the left-hand side. Here, quantity is going to be on the right bottom side. And then you have demand and supply, okay? In the center of this, where the supply and demand intersect, is market equilibrium. So that's saying that we have, a 6-month supply in real estate terms. It's a good supply for home buyers and sellers. And it's also the equilibrium price and equilibrium quantity. So, why are we not at an equilibrium? Well, that's where the facts come into play. So, one thing that makes this seem like a bubble is we have more existing home sales now than we had since 2006. So there hasn't been a market like this since 2006, which is right before the market crash, which makes it seem like a bubble, right? Makes it feel the same. But there's some other factors going on here. So we have lowest mortgage rates of all time, which is really incentivizing buyers to purchase right now. Inventory is down 38% from last year to today, which means that our supply is all jacked up, right? The supply line, we're going to have to do some adjusting to that. We have an increase in asking price 15% year over year, so that means our asking price is going up 15%. But our home prices are going up, existing home prices are going up 20% year over year. You're going to see that further down the list. 32-day average time on market. The reason I threw that stat in there is because if you look at lines 9 and 10, existing home sales actually dropped 3% from March to April, and pending home sales dropped 4.5% from March to April. So that's a 1.5% difference in the same month, and that's huge when we're talking about overall housing stats, right? 1% is a big deal. So that 32-day average time on market means that we should really be looking at the pending home sales for an accurate view of what's going on today. Existing home sales are lagging a month behind. So 4.5% for March and April, which is very, very interesting that you're seeing a decrease in home sales from month over month, but we're seeing that home sales are up 29% year over year. Median sale price up 19% year over year. Obviously, existing home prices are up 20%. So that 1% variance from median to existing home prices is also going to take into consideration new construction. New construction isn't going to it's not going to appreciate nearly as fast as existing home prices, just because of the way new subdivision appraisals work. Existing home sales up 29%. That's something that's really, really interesting to me. Because we don't have any foreclosures going on right now. So we have a shortage here. So that's the problem. Our supply can't meet our demand. So with the introduction of 4.8 million millennials turning 30 this year, and then we have a historically low mortgage rates, and then we had COVID hit, which is really incentivizing people to work from home. So you have millennials who are tech savvy, who are now working from home, and they have low interest rates, so they are able to purchase a home. This increases our demand significantly, right? So our demand curve actually shifts to the right here quite a bit. The issue is our supply, right? So right here, our new equilibrium obviously has an increased price, but not 38%. So realistically, our supply might be somewhere, over here. I'll put an X where the supply might be at, which is creating a shortage. Okay, so this difference here is going to be our shortage, which is driving home prices up even further. So with new home sales being down, with existing home sales being down month over month, it's obviously a supply issue. Okay. Previously, it wasn't a supply issue. That was not the issue before because people were building as fast as they could. So, what's causing the supply issue? In order to have a market crash, there has to be a catalyst, right? So, how do we increase the supply beyond this point of equilibrium? So, we actually have to increase the supply maybe somewhere up here or maybe even somewhere up here to cause a market crash. Or we could decrease our demand. So our demand could shift significantly this way, and that would cause a market crash as well. Millennials, they're not getting any younger, right? So there's still a lot of us coming into the real estate market buying our first homes. So that's not going to change. Interest rates aren't expected to skyrocket, right? They're at the historic low. So even if they go up 1 or 2%, it's not going to change the demand enough to cause a market crash. So what else could possibly cause a market crash? And that would be an increase in supply, right? So if we're short 3.8 million homes, you can see that on line 14, we're short 3.8 million homes. So how do we do that? How do we make it, it'd have to be somewhere around 5 million homes to really see a market decline, and then maybe even 6 million homes to see a market crash. Well, new construction makes up for about 1 million homes a year, 1.1 million homes a year. So that's not going to happen unless the builders somehow figure out how to triple production. Even tripling production would only meet our needs, so they would have to do 6 times the production they're doing now to cause a market crash. So that's not realistic, simply because the supply chain's not there and the land's not available. Right? It's impossible for that to just happen in such a short amount of time. So new construction is not going to happen. There's a foreclosure moratorium that is affecting existing home sales, right? But even that is a little bit different. So if we have existing home sales are a weird thing because you can't make more existing homes, right? That's just people moving. So when somebody sells an existing home, they're going somewhere else, right? So they're not a first-time home buyer anymore. And that's 32% of our entire market, right, is first-time home buyers. So existing home sellers are existing home buyers, which have to move somewhere, right? So it's a one-for-one swap. You don't actually gain anything when an existing homeowner sells a house unless they pass away, they move to a retirement home, or they move in with family or rent. But even if they rent, that means that there's an investor that's picking up a property and turning it into a rental, right? So that still doesn't really increase your inventory at all because, again, it's a one-for-one swap. So existing home sales, that doesn't really even play a factor. You can't increase the amount of existing homes available because they're already available. But there is another interesting thing that could maybe happen. That is real estate investment trusts. They make up over 8 million of existing homes in the entire real estate market. But again, we run into a weird issue where real estate investment trusts own those 8 million homes and they're renting them out. So it's for rental income. So let's say that they go to sell these houses. Well, it's going to displace over 8 million families, right? Which they then turn into home buyers and again increasing demand. So you can increase the supply, but then you would also increase the demand proportionately. So either investors are going to gobble those up, or now these renters are becoming buyers. So what could cause the market to crash? The only thing that could do that is a drastic decrease in demand or a really, really drastic increase in supply. And I just don't see any scenario where either of those are possible. So more likely we're going to see the housing market adjust gradually, right? So with a gradual increase of interest rates as they start going up, maybe 1-2% a year. Let's say that we go up 1% a year, our demand decreases 1% proportionately, then that works out. But we also have like other economic factors to consider as well, such as unemployment, which is decreasing rapidly, right? So we're down to 5.8, which is significantly lower than we were last year. 5.8% unemployment. Our economy is thriving, right? So more people have more money than they've ever had before. People retiring are now cashing out and buying retirement homes. I mean, the economy is just on fire right now. And even if we saw a huge decrease in, let's say, the stock market crashes, I don't think that's going to correlate over to the housing market. Millennials aren't reliant on the stock market for income, nor are they using that money for down payments. It's coming from it's coming from our booming economy that we have right now, and or professionals, young professionals, especially like when we see. I hate to really pigeonhole myself by looking at a specific market, but when we look at Eastern North Carolina, we have Raleigh, Charlotte, which are booming technology cities. So we have Raleigh, which is one of the top 3 biotech cities in the world. We have the entire coastline, which is more of vacation homes. Vacation homes might take a hit if we see a market crash, right? Because then we have like the CEOs of a company are taking a hit. But realistically, I don't really see a market or a stock market crash. I don't see why we would have one in the near future. I don't think there's a bubble there either, but that's a topic for a whole nother conversation. But let's just say hypothetically that we do see a huge crash outside of the real estate industry. I don't think our industry is going to be impacted too much because we're running on technology now, and millennials are running the show with being 32% of with 4.8 million turning 30 this year, and first-time homebuyers being responsible for 32% of sales. It might even exacerbate the problem if we see a crash where people start staying in place, where you see older people not selling their homes, not downsizing, not moving in with family members. We might see an issue with in a decrease, an even greater decrease in existing home sales. But that decrease from March to April in existing and new construction home sales, that's the real problem that we're seeing here. And that means the problem's going to it's not really even a problem, but we're going to see the prices continue to climb as long as those numbers are decreasing as well. So unless we figure out how to start increasing supply or the demand decreases, this market's here to stay. So in conclusion, there's no real fear of a market crash, right? I would be the first one to tell you, if you asked me a couple months ago, like, hey, Zach, is the market going to crash? I would say absolutely, because there's, it feels like a bubble. It's just like everything else. We saw the housing market crash. We saw stock market crash last year. We saw, that was because of a pandemic. But we also saw Bitcoin. Bitcoin's a great example of a bubble, right? It gets hyped up and then it stops. But housing is not a hype, right? We've got a limited number of supply, and we have increased demand. There's less places to rent. We have more millennials than ever. It just doesn't make sense that there would be a market crash. If you have questions or would like to discuss this in more detail, because we're still at a 50,000 foot overview, there's a lot more we could get into. We could talk more about unemployment. We could talk more about 30-year mortgages versus 15-year versus 5-year ARMs. We could talk about the current economic climate in general, from a global or national standpoint, or even from a local level here in North Carolina, or even more local, looking at Eastern North Carolina or military towns. We can have those discussions. But in conclusion, like I said, no housing market crash in the near future, and I anticipate a slow and steady increase for the next couple of years. And then once we see mortgage rates start going up and supply catching up, then we'll start reaching that equilibrium price again. Until then, there's going to be a shortage. So if you're looking to buy, there's no point in waiting, because this is going to continue. And if you're looking to sell, it's a good time to sell. I mean, you're going to be in this market for a couple of years, so there's not a huge rush. You don't need to sell today. But it'd be time to start talking to a real estate professional, getting a comparative market analysis going and seeing what kind of equity you have in your home now, and then looking at what you can afford. We'll make a whole separate video geared towards buyers and sellers, specifically consumers. That way we can really show you how this affects you, and where you're at in life. But like I said, if you have any questions, feel free to reach out. Thanks for joining me today, and I hope you have a good one.